Hello, and welcome to Money Talks with LNA. I'm your host, Leandro Porfirio, accountant and director at LNA Accounting. Today, we're talking about a topic that can actually put real money back in your pocket: tax planning for the financial year 24-25. But I'm not alone. With me is Emma, our senior tax specialist who's helped hundreds of clients save big at tax time. Welcome, Emma.
Thanks, Leandro. I'm really excited to share practical tips that can make a huge difference for anyone preparing their tax return.
Let's get straight to it. Did you know that the decisions you make before June 30th just could mean thousands of extra dollars in your pocket are lost to the ATO? Emma, why is tax planning before June 30th so important?
That's such a great question. After June 30th, most tax saving opportunities are gone. The most proactive taxpayers always review their situation now, and those little actions really add up at tax time.
Well, here's what really gets me. We're not talking about complex loopholes or risky schemes. These are completely legitimate deductions that the ATO actually expects people to claim.
Let's break this down into real numbers. What's the biggest missed opportunity you're seeing right now?
Superannuation contributions are the heavy hitter here. With the $20,500 cap, someone in the 32.5% tax bracket could save up to $8,937 in tax. That's like getting paid to save for retirement.
Speaking of missed opportunities, let's talk about working from home deductions. The data shows that 48% of eligible employees don't claim their full home office expenses. That reminds me of a fascinating case study. An average office worker claiming just 2 days of work from home per week can typically deduct over $1,200 annually.
You know what's wild? The ATO's data shows that people who plan their taxes before June save an average of 2.3 times more than those who start in July.
Well, that makes perfect sense when you think about timing. Like with business expenses, prepaying certain costs before June 30th can make a huge difference.
Let me give you a concrete example. A small business owner prepaying $12,000 in annual rent before June 30th could save nearly $4,000 in tax this year instead of next. That's real money back in their pocket.
And don't forget about the instant asset write-off. The numbers on this are pretty incredible.
Oh yeah, businesses can deduct the full cost of assets up to $20,000 immediately. But here's the kicker. You need to have that asset installed and ready to use before June 30th, not just ordered.
That timing element is so crucial. I've seen the statistics on how many people miss out because they don't understand the installed and ready for use requirement.
Let's talk about the investment properties, because this is where people leave serious money on the table. The difference between a repair and an improvement can mean thousands in immediate deductions versus years of depreciation.
So what's your take on the most overlooked deductions for regular employees?
Professional development is the big one. The latest figures show only 23% of eligible workers claim work-related education expenses. We're talking about courses, conferences, and even relevant books and subscriptions.
That's exactly what I was thinking about. Even simple things like union fees and professional memberships often go unclaimed.
Here's something that might surprise people. The ATO actually wants you to claim everything you're entitled to. They just need you to keep proper records.
Well, speaking of records, the digital revolution has made this so much easier. There are apps that can categorize and store receipts automatically now.
You know what's interesting? Studies show that people who use digital record keeping claim on average 32% more deductions than those who use paper systems, and they're less likely to get audited.
That's because digital records are usually more accurate and complete. No more faded receipts or missing documentation.
Let's wrap this up with some actionable steps. First, check your super contributions. There's still time to maximize those before June 30th. Second, review your work from home arrangement and start tracking those hours. Third, get your documentation in order now, not in July.
And to conclude, what would be your main message?
Thanks so much, Emma. And thank you to everyone listening. Don't forget to follow Money Talks with LNA for more tax tips, real stories, and advice to help you grow your money. If you found this episode helpful, share it with a friend and let us know your tax questions. For our next show, see you next time and happy tax planning!